Hey, what's up, my friend? So in this video, you'll find out what's going on in the financial markets right now, where we'll look at the Forex markets, commodities, bonds, gold, and etc. And also identify which are the best trading setups for this coming week, alright? So let's begin. So the first market we are looking at, right, it's Euro Dollar. So you can see that Euro Dollar, generally the trend is still towards the downside, right? Some basic technical analysis should put you on the right side of the trade, right? Lower highs, lower highs, lower highs, and lower highs. So at this point in time, right, some of you who use trend lines, right, you should be able to draw this over here. Okay, so you can see that this market pretty much is at this downward trend line over here. So if you want to go short, okay, you can look at the 4-hour time frame. What you notice is that this market pretty much made a lower high as well, signaling that this pullback might possibly be over. So traders can either look to go short, right, by having a sell limit order at this level, all right, or wait for another pullback, a weak pullback, right, looking like a bear flag, and before you short the breakdown of this low over here. So there's a couple of possible setups on Euro Dollar. On Pound Dollar, something similar, right? But this time around, I would say the trend is more pronounced on the Pound Dollar. In other words, the trend on Pound Dollar is weaker than Euro Dollar. So this would be a better market to short, right? Because it's weaker than Euro Dollar. So you can see that again, right? Come into this area of support, all right? And also near this downward trend channel, right? Near this area of value. So if you look at the 4-hour time frame, right? Something similar. You pretty much have a retracement, then this very weak pullback. The market couldn't take out these highs, and then it broke down over here. So this could again possibly be the end of this pullback over here. Traders again can look to get short, right? Couple of ways. Number one, having a sell limit order to get filled over here, and having your stop loss, right, 1 ATR above these highs. Or alternatively, if you prefer, you want to wait for so-called more confirmation where the price heads down lower, does a weak pullback, maybe in the form of a bearish flag pattern, and then you go short on the break of this lows over here. All right, so this is the Pound Dollar trade. Another possible setup towards the downside. Looking at Aussie Dollar, right, this is a trade that I won't be taking, but what I want to highlight out to you right now is that at this point, right, what you're seeing on the chart right now, this isn't a good time to go short. I know it's a downtrend, right? But why I say that is because if you look at this, the price action of the Aussie dollar, what it tends to do is it heads lower, it retrace, breaks down this low, retrace, breaks down the low, retrace. This time around, it does a stronger downward move, right? Then it retrace, downward move, retrace, downward move, retrace, downward move. What's likely to happen? Well, it's going to retrace, right? So this is why I say you don't want to be shorting at this point in time, because yes, you can short, you can go short on the break of this swing low, you go short. But where will you put your stop loss, right? A logical place to put your stop loss is at least above the previous swing high, right? To make sure that the trend is still intact. So if your stop loss is going to go above this previous swing high over here, somewhere here, you can see that your stop loss is going to be pretty darn large. Okay, so what is the alternate way to go about trading this market? Well, you know that this market is in a downtrend. It breaks down, it retraces, it breaks down, it retraces. So why not time your short entry on the retracement? So if the retracement were to come, right, you can look to get short somewhere around this area. Okay, and now your stop loss is much tighter, right? So let's say your original stop loss intended is this level. Now from here to here, this is your stop loss, which is much tighter compared to chasing the markets now and wanting to go short near this lows over here, right? So Aussie dollar, I agree it's in a downtrend, but it's not time for me to short this market yet. Okay, so moving on, New Zealand dollar. This one over here, you can see that it's similar to Aussie dollar, but this one has not break down the lows yet. So there is still a chance for you to short this market. If you look at the 4-hour time frame, okay, New Zealand dollar pretty much, right, retested this highs over here, now is at this area of support. So again, what you could look for is you could look for a build up to form, right, prior to the breakdown, right, going short, and then you can reference this level here as your stop loss, right, a much tighter stop loss, right. This is for New Zealand dollar, right. You can look at the daily time frame as well. Market is in a downtrend, so there's a good chance, right, that you could possibly retest this lows over here or even exceed it by a little bit, right, before it retraces back once again. So if you look at this market, breaks down this swing low, retrace, breaks down this swing low, retrace. So there's a good chance it could break down this swing low and then retrace. Okay, so this is New Zealand dollar, right? Moving on, let's look at a little bit more of the exotic currency pairs. Dollar against the Turkish lira, right? So this is a market that has actually gotten a lot of publicity recently, right? So you can see that the move, right, pretty much went parabolic over here. So if you look at it, it pretty much resembles, right, the rise of Bitcoin in 2017 when the market is pretty much trending strongly. So when you see such moves in the market, especially on a daily or weekly time frame, right, where the range of the candles get larger and larger, this is a sign to tell you that, hey, watch out. Not to go long, right? You don't want to go long at this point in time because it's already too late. When it's out in the media, it's in the news, where you notice that the market is so bullish, it's too late. It's too late to enter. So what you want to do is, if you're long, it's time to lock in those profits to protect yourself, right? To tighten your trailing stop loss, right? For example, this case, right, I always recommend is to trail your stop loss, right, on the previous day low. So in this case, right, let's say you're long, for whatever reason, maybe you long the breakout of this highs over here, right? You want to be locking in profits, right? Because anytime the reversal can be swift, right? So in this case, right, I didn't trade this, but what I would have done is I would have trailed my stop loss, right, on this previous day low. So if the market breaks and closes below this previous day low, I would exit the trade. So what happened is that, this candle pretty much did the reversal, and I would have been out if I had actually long this breakout over here. Okay, so anyway, the market has now retraced, right? But that's not the point, right? The point is, when the market goes parabolic, right, the reversal can be swift, right? And you really want to, play good defense instead of, trying to, go all in and, mortgage your house, sell your whatever your kids are. No, just kidding, right? Sell everything and go all in. That's not the way you approach trading. So anyway, now that the move is pretty much publicized, right? People who are wanting to join the party, late to the party, they're still trying to get long. So for me, I'm going to take a counter trend approach, right? I'm actually looking at this level, right? I'm going against the herd, and I'm looking for a false break setup on the Turkish lira. So what could possibly happen, or what I'm looking for, is for the price to head higher, retest this highs over here, right? So traders will say, oh, breakout, let's go long, brum, they go long. And what I'm doing is that I want the breakout to fail. Right, I want to profit, right, from traders who are long and the market reversed and they are now in the red. I want to profit from this group of traders. So how that would work is the market breaks out and then it does a reversal, closing lower. At this point, I have a swing high point that I can reference to set a logical stop loss, which is this level over here. I can just set it, a buffer, 1 ATR above it. And to see if this move, right, can reverse back towards the downside. I do agree that, the trend could still continue, right? So I'm not going gung-ho or very aggressive with this, right? I know it's a counter trend trade. So I'm just looking to capture one swing in the market and see how far that swing can go. What I'll do is that if the market hits lower, I'll just trail my stop loss, right, on the previous day high, right? If it breaks and closes above the previous day high, right? Let's say the market does head down lower, right? If it breaks and closes the previous day high, I'm out of the trade. It's going to be a what they call a good defense trade. I'm not looking to capture or ride the entire down move down to $3, right? That is unlikely to happen. Okay, I'm just in for one swing in this trade. So that's the dollar against the Turkish lira. Moving on, dollar ruble. Where are you? Dollar. Okay, it's not here. I've got to look at this Forex one. All right, so you can see that what's happening is that dollar against the ruble. Previously, we had a breakout of the ascending triangle. If you do not know what this chart pattern is, go and study my YouTube channel. I have a video devoted to this chart pattern, right? So we have this ascending triangle, a series of higher lows coming into resistance, right? So this is a sign of strength, and it's telling you that the buyers are willing to buy at these higher prices. And the market did break out, okay? So that was a setup to go long. So right now, what's happening right now is that the market is forming another potential ascending triangle, right? So if you missed the earlier move, right, don't worry, because what's happening right now is that the market is forming a potential ascending triangle again. So if you can see that, a series of higher lows coming in. So if it does break out, right, this could be a setup for you to go long on the dollar ruble. And for more advanced trader, right, you can actually look down into the 4-hour time frame and look for a false break set up at this swing low over here. Market comes in, does a false break, close higher. You can look to go long at this point in time. And on top of it, right, if you draw a trend line, right, I believe it pretty much connects the lows as well. So that kind of adds confluence to this trade, right, for dollar ruble. So a couple of ways you can trade this dollar ruble. And moving on, right? Just I know I covered a lot of pairs this week. It's like, I'm on steroids, everything just going. It's like vomit. Well, not really. But anyway, Euro Aussie, right? It's again similar to the dollar against the Turkish lira. You see that you have a very nice strong move, right? Coming into this area of resistance. Again, I'm just looking for a false break to see if the move can fail, right? So thereby profiting from, traders who are trying to buy the breakouts. Okay, so that's pretty much it for the Forex market. Let's have a look at the stock markets, shall we? So stock markets, generally one word bullish, right? You look at the S&P 500. From the looks of it, you don't want to be shorting, right? Market is in overall and long term in an uptrend, right? You can see a series of higher lows, higher lows, higher lows, higher lows, higher lows. And right now it's a little bit overextended. So again, bringing back to the Aussie dollar concept that we spoke of earlier, right? You don't want to be buying when the market has just broke out of the highs and is looking overstretched, right? If you want to find value, right, on this S&P 500, what you can do is, again, let's see, the 20 MA, okay? See that this market tends to, have a couple of bounce off the 20 MA. So if you want to buy value, you can let it approach back towards this 20 period moving average. At the same time, you have the confluence of this previous resistance turn support. That would be a much more sweeter trade location to be trading off the S&P, right? With a long bias. Moving on, I want to talk about the Nifty 50, right? Because I believe there are a number of traders from India. So hello, my friends, right? So let's talk about this as well. So again, generally, the trend is towards the upside, and don't want to be shorting. At this point in time, one thing about the Nifty is that it tends to, break out, form a build up, break out, and then form a build up again. So what is a build up is actually this type consolidation, tight consolidation on your chart, right? Tight consolidation. Right, so it consolidates, it breaks out, consolidates, it breaks out. So one way to catch on board the trade on the Nifty 50 is, again, wait for a tight consolidation, right? Then break out. When you get a tight consolidation, now you can reference this low, right, as your stop loss point, right? Referencing from your from the swing low. Okay, so now you have a much better or rather a logical place to set your stop loss. Okay, so this is for the Nifty 50 generally, right, still in an uptrend. I think most of the stock markets are still in an uptrend. But of course, there are a few that are not performing too well. But generally, I think the markets in the US, right, the Nifty 50, are doing quite okay. Moving on, let's have a look at bonds, shall we? So bonds, so let's look at the 10-year. So bonds have been pretty boring to me over the last few months, right? The price action is just choppy, right? If you ask me what's possibly happening, right, is that you look back, the market is actually previously in a declining stage. Okay, now it seems to be in a potential accumulation stage where the market goes into a longer term range. So a couple of ways you can play this or trade this. I hate to use the word play because trading is a business, right? Not to play, right? So a couple of ways you can trade this. Number one, right? My bias is still short on this unless, right, this level gets broken. So if the market comes up, does a false break and close lower, I'll be looking to short this market because my bias, after all, is still towards the short side. However, if this market comes up to the resistance level, right, it comes up over here, forms a build up, right, then I'll be looking to long the breakout towards the upside, because when there's a build up at the highs, right, it's a sign of strength telling me that there are buyers willing to buy in front of this resistance level, and there's a good chance it could break out. So if that happens, I'll be looking to buy the breakout on the this 10-year treasury note futures. Okay, so this is for the bond markets, right? Still price action is still choppy, but till it comes to this level, that's where it would be a level of interest for me to trade off. And last but not least, right, let's have a look at gold, shall we? Ching, ching, right? So gold, it's in a downtrend, right? It's quite a strong downtrend as well. If you just pull out your 20 MA, notice that this price, right, has been consistently below the 20 MA, and recently it did exit a little bit. All right, so my bias on gold is still short. In fact, it's at quite a nice level, right? It is a previous swing low, now acting as resistance, also near the 20 MA. So to trade this, right? So in fact, I'm actually already short gold, right? Let me just share with you where I got short. Pretty much got short on this breakdown of this swing area over here. Pretty much have a build up below the 20 MA. I went short on the breakdown, stop loss 1 ATR above this highs. But some of you who are not short, right? Hey, what you can do is, again, price is still in a downtrend at a good level, right? A previous swing high that could act as resistance and near the 20 MA. So if you look at the 4-hour time frame, what you want to see is a break of structure. So what you can see on the 4-hour time frame right now is that you have pretty much a lower high form over here. Right, this is the lower high. So if the price breaks and close below this swing low, right, breaks and close below it, bearish candle, you can look to get short, right, having your stop loss just a 1 ATR above this highs. Right, a simple trade management for you is quite simple, right? What you can do is, again, on a daily time frame, let's say, the trade got executed, the price did hit lower, okay, what you can do is just simply reference the 20 MA, right, and just use that to trail your stop loss. So as the price hit lower, the 20 MA will start to point down lower. Okay, so if the price now breaks and closes back above the 20 period moving average, you exit the trade. So that's one way you can go about trailing your stop loss. Alternatively, you can use, market structure, lower highs, lower lows, stuff like that. That is fine as well. I actually did a video, right? 5 ways to trail your stop loss. If you want to learn more, check out that video. Okay, so that's pretty much it, right? In this week's analysis, I think we covered quite a bit, right? And for those of you who are new to what I do, you want to learn more, my strategies, techniques, and concepts, go down to my website, tradingwithrayner.com here. Okay, and I have a couple of trading guides that are very useful to you, especially it doesn't matter whether you've been trading 1 year or 2 year or 3 year. Right. First and foremost, you can download the Ultimate Trend Following Guide. We talk about how trend following works and how you actually can go about riding trends in the market. The other guide is more towards price action trading. How do you actually better time your entries and exits? How to read market structure. Right. So go to my website, click the blue button, and download these 2 trading guides. It's completely free and I'll send it to your email address. Alright, so with that said, I have come to the end of this video. If you've enjoyed the analysis, hit the thumbs up button. Alright, like my video, subscribe, and any feedback, comment, let me know below and I'll get back to you. With that said, I'll talk to you soon.